What happened to that so-called market crash? Again?
Ja.
Have you been listening to the news? I bet you must have heard all they are saying. Those prophets of doom are everywhere right now. They have something to tell anyone who gives them a listening ear. Incidentally, their prophecies aren't exactly new. They come with different words but still have the same message. A message of fear. They yell, "See blood everywhere in the market. Run! Run! Run!" At the time of making this, just some minutes before the morning bell, it is clear the markets are poised to open lower. Stock futures are lower, and they look like they are heading even lower once the bell goes off. But remember, that is what markets do. They go up and down. Every up move or down move is neither a bull or bear move respectively, and those moves should be examined carefully. So what do we know for now? For starters, of course, first, there is Russia, and all that is going on over there. Then, as expected, there is the United States. Now it is a game of who said what. Russia says they are backing down, but the United States says there is bound to be an attack soon. Believe what you want. What is important is, markets don't like uncertainty. And nothing spells uncertainty more than this. Who did what, and to whom, and when? All that kind of stuff spooks the market. Hence, as expected, the fear dump will be major. Major, only because the market begins with almost everything selling off. But after that, what next? Think about it for a moment. Do you really think everything heads down from there? Well, for us, the fundamentals have not changed so far. And what are these fundamentals? Cataclysmic economic news, of course. And a Fed that has no intent to stop pumping so much dough into the market. Hence, putting these together, the result is pretty clear. A market rally pretty soon. On this channel, we try to stay away from politics. But if history is any indication, what nations say they will do is often different from what they end up doing. Hence, once this political move involving Ukraine has achieved what those in power wanted to achieve, then expect an upward rally like never before. You can count on it. Does that mean we are saying this market can never crash? Nope. In fact, we believe like the house of cards it will come crashing down someday. However, we only believe that day is not today. And this is not about gut feelings. It is just by focusing on what the drivers of the market are. Crude is poised to go to heaven from here. The 10-year yield seems to have steadied just above 2%. You can throw whatever you wanna throw at this market for now, and it will still shake it off and find a way to go up. Think about it. They even shut down the whole world for a minute. What happened? Was it not just a correction? That said, if bullets start flying over there in that Russia, Ukraine area, there would most likely be a correction. However, it won't last long. It would only be an excellent buying opportunity. This market is poised to take everything they throw at it. There is a Fed out pumping money into it. They will keep at it until that day of reckoning comes. So, as an investor, what do you do with this information? Well, we follow our dear Uncle Jerome. You know who we call our Uncle Jerome, right? Fed Chairman Jerome Powell. He is pumping so much dough into the market, so we find the best opportunities to get what we can. At the same time, it is important to be hedged. Precious metals are a good starting point. Cryptocurrencies too. At least, the renowned ones. You have to do what the banks are doing. Find ways to keep true assets. And that, for us, is precious metals. And the reason for this is simple. No one can say with all certainty when this whole thing will crash to the ground. It is called investing for a reason. The risks are enormous. Well, so also the rewards. So do proper risk management and go in. Go long. At this point, we may come off as crazy. However, this is how we look at it. The stock market is a derivative of something else. If you recall your A-level math, That is, if you were that kinda guy. Then you understand the basics of y being a function of x. The simple way to explain that is, y is dependent on x. This means the value of y can only be understood when you consider the value of x. Sorry for going all mathematical on you. But here, the stock market is dependent on the debt market. Hence, there is no point paying attention to the stock market. All you need to do is pay attention to the debt market. The stock market will only respond to the triggers in the debt market. And as long as we are yet to see that 10-year yield spike uncontrollably together with the relative strength of the dollar, then, whatever downside the stock market experiences is temporary. Remember that markets go up and down. Hence, nothing to worry about here. Still go long. As we always say, it is best to keep it simple. And remember, stick to your risk management in this game. The old saying of the market continues to remain true: bulls make money, bears make money, pigs get slaughtered. Thank you so much for watching. Please, kindly consider subscribing. We release videos every US market day. So please be at liberty to check out our other videos. It really means a lot to us. Thank you.